All right, guys. I know this is good. This is completely random and off schedule, but you know what? I just say screw it. Let's go ahead and watch this happen live. See what happens. Now I don't usually do this, but if you guys are tuning in, I do and welcome you. I just need to get everything situated because we're not rolling with the intro today. We're just going right into it. I just gotta send my links out to everyone. So just we're doing this like the old school days. Like I said, I usually don't do this, and it's a little bit off schedule, so I don't really expect a lot of you guys to hop in here today. But you know what? Let's uh let's just hang out. It's only gonna be for a little bit, guys. It's not gonna be a long stream. I just want to see what happens. When does the FOMC stuff start? Is it? Am I saying that right? Oh, let's see. Mumbo, VP Johnny. That's slang and Swahi. What does that mean, Alif? Oh, say what's up. Okay, cool. Josh V, how you doing, my friend? Good to see you. I know, guys, this is completely random. Um, I know we're a little bit off schedule here, but I figured, you know what, stuff's happening. Everyone's and one of their mother is talking about this, so I figured we just, tune in live and see what's going on. I don't plan on staying like a full hour and a half. It's like going to be a full stream. I figured if you guys are around, watching this anyway, I figured we'd watch this together. Coyote, what's up, my friend? Like I said, I apologize for the spontaneousness and randomness, but we're not on schedule. But I figured, you know what, we just hang out for a little bit, watch this, watch what happens. Or do we get stopped out? Do we, are we going to continue to dump? We're not really, we don't really have a plan. I mean, we do have a plan, but we're not really sure what's going to happen. So we're going to be crackheads today. Let's see what happens. Look at this. It's funny because like we're on the 1 minute watching this happen. You hop to a 30-minute and it's like not even, it's a blip on the map. So I was watching Jason Casper before. I'm not gonna lie. I know we had that huge we had that discussion yesterday. I don't know why. The Jason Casper, it is like his chat is hilarious. Um, the memes are funny. I just like he's like I said, he's like one of the very few. I saw I saw one or two of you guys. Oh, I saw one or two of you guys who watch me in this chat. Rich man, if you hear, I saw you, and I forgot someone. There's someone else I saw. Wow, look at this. Jason Casper is hilarious. Yeah, he's a funny guy. The memes, we got to step up. We got to get memes like that one day. This is always so interesting to me. Like watching people fight in this range here. Like I said, I'm not trading any of this. We're just here hanging out, guys. We're having a good time. You change your candle colors. Yeah, I don't know. I felt like doing it. I changed it to this. The wicks are a little bit brighter than the bodies. It just makes it look better, in my opinion. If you guys, I mean, I'm open. I try different color combinations. This is what I usually just do. $25 basis points. Really? FOMC is it's basically Fed. I forgot what it stands for, but it's the Fed meeting, basically going over interest rates, and in the U.S. and also when it comes to Bitcoin trading, it's a big deal. So right now the FOMC is currently, let's see if we can pull it up here. Yeah, it confirmed 0.25. So basically what this does, this confirms more of a bullish move, but I'm still not convinced. Everyone was expecting 0.45, I think it was. And basically what the FOMC is every month they go over basically interest rates in the US, and they figure out if they're going to raise it or lower it. And then basically how this is affected is people will go ahead and basically either take money off the table and wait for this news to come out, or they'll try to front and run this like what's happening now. Each time we got a breakout, it looks like we're getting a false break. Who knows? I'm not here to tell you what's going on, but the Fed rate decided to raise it only 0.25, which is better than the 0.45 that they were gonna. Was it point? Oh no, I'm sorry. I think I messed that up. Yeah, we were expecting a 0.25. I'm sorry. We were expecting a 0.25, and then now, as of right now, the base federal interest rate is 4.5 to 4.75. I actually don't know what the exact one is. If you guys can confirm it, yeah, 25 was priced in. I believe so too. And basically, it's hype. If the Feds raised it less or lowered it, I believe we would have pumped. But because of basically this being accounted for, us people expecting this is the type of price action you get. Very volatile candles. You get a fake out, and then we get a wash out to the downside. It's now 4.75. Okay, just want to make sure I got that right. Alley Cat, hey Johnny, do you have the bot ready to trigger? I'm gonna keep it at the entry for now, Alley Cat. If we significantly pump, maybe I'll raise it up to. I'll probably raise it up to the high here at 23,962. But I'll be honest with you, I think we'll be all right. I just don't see it pumping, because I honestly believe this extra move to the upside here, and I'm not gonna say the entire pump, but I'm gonna say that this move to the upside here was definitely not only a part of getting close to the resistance here, which we didn't get that close, but I also believe that all this was priced in with expectations of the FOMC, of all what's going on. So me personally, oh, you guys can't hear the music, huh?
Committed to returning inflation to its 2% objective.
There you go. You guys, is this video overpowering the music?
That further rate hikes would be appropriate, and that seems to be what markets are responding to.
Let's pick up on the price action just briefly.
Yeah, so we're at a 4.75 confirmed.
On the S&P, on the Nasdaq 100, we are down by a third of 1%. But looking into the bond market briefly, we are higher at the front end by about 3 basis points. So that ongoing increase is phrased.
Like I said, it could still move off of the Powell speech in 25 minutes.
It's 423. Your 10-year lower by 3 basis points at 348. The curve a little.
Nah. Okay. Cool.
210's down to negative 74. We're down about 5.
Could still move off of Powell. Yeah, it's possible. We could be front running it. Like I said, I firm this, like, it's part of the reason I personally think that all this is priced in, unless Powell says something that's excuse me, unless Powell says something that's like very bullish, which even still I don't really care for. Regardless, this stuff doesn't affect me. It's fun to watch the sideline price action go on and watch everyone go crazy. Look at these extreme candles. It will bounce up and down like a yo-yo. Yep, Alley Cat. When it comes to like basically Fed announcements like the FOMC meetings and Fed rate hikes and all that, people go crazy. This is mostly due to volatile movement, people trading the smaller time frame. You know, it looks crazy on a 1 minute, but when I go to a 30-minute, look at this. It's like a blip on the map. That's why I find this hilarious that people are freaking out over these moves, or people are, you know, sitting there sweating in their, you know, soaking in sweat in their computer chairs waiting for the stuff to happen. There's really no major effect.
Really has been pushing back, particularly on the easing of financial market conditions. They don't want financial markets credit.
I'm curious, did any of the
progress we've seen on inflation, and given today's job
LTC can sit on it and spin. I'm not worried about that right now. It's KDA. I'm so far. ADA does not even close to my entry.
in the country this month that we'd see an increase in entry-level wages from $12 to $14 per hour, and that is something that the Fed does not want.
I was nervous having bond entry so close if we wicked in and out of stops multiple times. I mean, we're using, I mean, I'm not sure what your entry or your stop loss percentage is, Coyote, but like us using a 2.75 on BTC and 3% on everything else. I think we were good. I think we were okay. It looks like we good. Yeah, I think so too.
More rapidly than they cool wage growth.
Michael Gapin, what's your reaction?
Do you guys want to listen to
In line
the music? Do you guys want to listen to the news? What do you guys want to listen to?
question for Fed Chair Jay Powell in about
Do you want me to put on another channel? No, I can't do that.
Well, I would say I have two questions. You know, is essentially the extent of further.
I guess it will take about an hour before it make direction. I would say at least another 20 minutes, 30 minutes. But yeah, probably around that time. Because look, it's spiking up again.
What Diane said, the labor market is quite solid. The data today doesn't suggest it's slowing down all that rapidly. The other thing I would say, so how else could the Fed push back against expectations of easing, for example, that are not related?
Let me know. Do you want to listen to what these boomers have to say, or do you want me to mix of both? Do you want me to just like mute the music? Do you want me to turn this off? I was watching. I was watching Elliot Wave Stab Guy. He is great. Just a shame he only does a few videos a month. Yeah, he used to be more consistent. Now I think he only posts like maybe like twice a month. But I mean, for what he has his own group. If you guys are interested, he has its own. It's a free Discord.
What are you looking for in terms of their guidance of whether to go further, how much further to go, and where the balance of risks is in going too far or not enough?
Yeah, I mean, he has his own free chat. If you guys want to go ahead and join, he has paid versions of it, but it's he has a free version. How much is it a month?
Household balance sheets, but corporate balance sheets, and that's why they're so worried about financial.
He has like a free chat.
Setting and moving in the opposite direction of where they're going, because it actually could not only undo the progress they've made
Descriptions.
on inflation, but
Light.
actually trigger more inflation, and that's something they're very concerned about. Is that we're now in an economy, a mirror image.
What is
of
PCM? Is that like price cost per month?
Into from where we were, instead of them trying.
Damn, he's charging 75 a month for a base plan.
They were able to raise rates a lot last year, and it now.
What's the difference between? Okay, that's pretty cool. The middle tier gets you a monthly 15-minute consultation. That's not bad.
In rate hikes rather than undershoot.
That's a lot. That's pretty expensive though. Can you send me the Discord invite link, please? Yeah, I'll send it to you on.
Also made reference to that they had a 3-month improvement in inflation in 2021, and then we're headed.
Where's
They don't
Coyote?
want that to
Coyote.
happen again, but they're haunted as well by the 1960s and
I just saw you.
1970s
Where is it?
stop
Where
and
is it?
go
Where is it?
policies of ban. They see this as a marathon.
There you go.
not a
Check
sprint.
your
They're not gonna stop.
per calendar month. Gotcha. Check your DMs, Coyote. I sent it over to you.
Or just nothing that will distort any behaviors out there. We are not there right now.
Just tell us which way we're going already. We're going up, down, side. We're going right, Scopes. That's all that matters. Up, down, doesn't matter. We're going right.
Is the idea that they're going to overshoot in some way?
Like I said, we're just here, just hanging out.
Do you see a Fed that out in 24 or 25 is going to begin to amend a band around 2% and migrate?
It's fun to make fun of them, but the music cool too. Yeah, it's funny watching everyone freak out about news announcements like this.
Neil Kashkari and his comments at Jackson Hole saying, we're
just in, what happened with FOMC? So, it looks like we got a guaranteed 0.25 points. So I think we are confirmed at sitting 4.75, which was expected. So obviously markets are reacting accordingly. I personally think all this could be, you can make an argument that all this is already priced in, like this pump. This was kind of just anticipating that move, and maybe we'll get an answer, hopefully down, but we'll see. The big guy with the bow tie is a gangster, though. Oh yeah, he's a pimp. Look how, the one thing, because like as someone who wears glasses, I think this is hilarious. His glasses are, his like lenses are way too small for his face. Notice how his arms stick out of his head. That's something I struggle with, because like I can never find glasses that fit my face, but like this is like the biggest size glasses I can get, and this is like, sounds like a cheat code for GTA up, down, left, right, R1, R2. Absolutely. Was hoping we dumped a lot. Looks like an owl, yeah.
The January data on spending, our proprietary card data that we look at shows actually a pretty decent bounce in spending in January, reversing some of what we thought was a seasonal weakness.
Was hoping we dumped a lot. This is mostly going to affect the smaller time frames. I think going forward, you know, we could get a move coming up soon, just because I think people are crackheads and they wait for stuff like this before making decisions. So I think this is the beginning of a possible move. Whether it's going to go up or down, I don't, nor do I care, nor do I know.
And inflation. We had this conversation with Rich Clarida about 15 minutes ago. What lags, Mike? Just how long are those long and variable lags?
Same thing with this guy. His glasses are way too small. Like if I look straight at the camera, like a little bit my bow out a little bit, but not as much as these guys.
So yeah, some of it gets baked in faster. The interest rate sensitive sectors are slowing. I kind of think the remainder of it is still.
He knows his stuff and regularly dunks on people.
Face more headwinds as the year progresses.
I don't know who any of these people are.
Quarter might be when most of the weight of prior tightening shows up in consumer spending. So I don't think we're there yet.
You'll excuse me for being somewhat impatient, Dan, but if you'd asked me back in August where the claims would be at 186,000 at this meeting, I would have said no, probably not, and they'd be going in the other direction. So is there anything to learn from that?
It's really been amazing how stunningly.
Like I said, guys, we're just hanging out here for a little bit. I know this is a little bit spontaneous. This is just more of like a, you know, let's just hang out, see what happens kind of thing. If you guys want to ask me any questions, you can.
And supply is now the most out of line is important. We're talking about 1.9 job openings per job.
I don't really plan on doing too much TAs because I did some yesterday. Like I said, we're just here to go ahead and watch the madness, which is these crackheads fight.
8.7% increase in Social Security.
Watch the crackheads fight each other.
That's really important because that's $8.9 billion in cash that 66 million at least consumers got in January alone. That is a very important amount of cash that is all likely to be spent. And from the spending data that he just mentioned, they are spending it. That is likely to be.
Oh, you got the green screen? Yeah, I got the green screen up.
Again, an additional
it's a pain in the ass to set up sometimes. But you know what? I figured we're due for a change. You know, the channel's starting to grow a little bit. I'm not saying we're not professional, but you know, this kind of gives a little bit of icing on the cake. You know what I mean?
John, I actually find pretty interesting. It's sort of the market wants to go up regardless. It was, you know, multiple hikes, whatever. Okay, let's go up. Things are good.
There's a lesson every time the Fed meets. It's never spin too much of a story just before the news conference starts. It's kind of like the earnings reports, right? The earnings come out.
Did we hit 700 yet? I know. Yes, we're at 700, guys. Thank you guys so much. Thank you guys so much for showing support. If you guys are new to the channel, you guys are here tuning in live. I really do appreciate you guys. 701.
Why aren't they giving us guidance every meeting? It can be lesser guidance, I get that, but there's sort of a vacuum here.
How good are you about jokes? I believe I have a good sense of humor.
March 22nd, May 3rd. When does this get important again? I don't know.
So if we have alongside
it's tough. It's tough when you're trying to communicate, like, from me from a camera to you guys to chat. Some stuff might blow over my head, which I think might be going on right now. A little $500 price swing, a little big deal. Yeah, I know. It's these people are crackheads, man. Make a voice channel. How do you get a half pound of meat out of a fly?
The data we've just gotten in the last couple of days actually hardens the Fed's resolve, and Chairman Powell went out of
Can I do that?
to say that there was no one who had a rate cut priced in December in the SEP when he talked about it. Now, Chairman Powell doesn't really love the SEP. It's something that's been sort of a thorn in his side at times, but I think that was very important guidance that he gave.
Crypto Beehive informed me.
Had a rate cut for 2023. The Fed really wants to hammer that point in. And
Oh, okay, yeah. If you guys want to, if you guys are, you know what? Well, yeah, we'll do that. Unzip it. Oh my God. Hey Johnny, hope you're feeling better. And hey chat, Crypto Santa Claus. Yes, I am doing well. Yeah, if you guys are in the Discord, if you guys don't mind being on stream, you guys are gonna be on stream. Just letting you know. If you guys are in the Discord, I'll be in Echo Chamber 1 right now. Here, I'm gonna do this. Hold on, you probably hear yourself. Let me change something real quick. All right, you guys should be good. Like I said, just letting you guys know, you guys are gonna be on stream.
Hey guys.
So if you have, what's up? So just letting you know, if you guys don't mind being on stream, if you want to talk, go for it. But yeah, guys, we're here. If you guys are in the Discord, you guys want to hang out and talk for a little bit, we'll be here. Let's see.
To really kind of change what markets think. Markets know you slowed down again.
Are you wearing shorts now? I actually am wearing shorts, Pratish. You know, it's nice. It's decently nice out. It's decently nice out. Yeah. I am sweating a little bit. No, I'm kidding.
When you mentioned the icing on the cake.
Uh-oh. Is this a joke that I missed?
You should know.
What should I know?
Wait. Just a fat joke. I'm fat as well.
You're trying to say I'm fat? I actually am kind of. I do have to watch my weight a little bit.
Me too. Me too.
A couple days ago on a Blackstone thing, and the unemployment rate is 2.2% in Kansas. Is the East Coast, are the elites like Lisa Abramowitz overwrought about all this while America booms?
Is it Monk? No, Monk is not in my Discord. He can be if he wants to. I'm not sure if he's here though. He might be sleeping. Him and Kite have very, very bad sleep schedules. So I try to keep mine somewhat normal. Does Monk trade? No, I believe he's tried. He just, I think he should, but when it comes to stuff like that, like one of the things that I've noticed is that, you know, I always say everyone can do it and everyone can, but some people might have more of a learning curve than others. And a lot of that has to do with self-reflection and habits that you practice. It's not necessarily trading itself.
Dan, just quickly, we usually give you the opportunity to pose a question for Chairman Powell. Can we wrap things up by doing that? Your thoughts going into this one?
If I was mates with Kite, I would be taking advantage of his knowledge for sure. Read the joke above.
financial markets. And I actually disagree.
Which one, Scopes?
Go ahead and go 50 if they actually felt like the situation was deteriorating. And
The one that Crypto Beehive dropped? I read it already. How do you get a half pound of meat out of a fly? Unzip it.
and do it aggressively. I would not underestimate their commitment to doing that again if they felt it need be.
Mike Gapen, final word. Same question to you, sir.
Listen, I'll refer back to what I said earlier. Is it on the table that balance sheet runoff can continue even if you're cutting rates? So can you make
Yeah, sorry guys. I know you guys are in the Discord. You're not gonna be able to hear
financial conditions
like the music and stuff, which I'm not sure if you care about that stuff, but
Thank you. If you are just tuning in, we are 12 minutes away from a news conference with Chairman Powell after the Federal Reserve chose to hike interest rates 25 basis points, another downshift. We're looking for some form of, wait for this, Tom, you'll love this phrase, hawkish downshift.
Oh, you kill me.
When you go from 50 to 25 and push back against market price.
H44, how you doing, my friend? Good to see you.
We have is different. And Diane,
Like I said, I know it's not a planned stream. I kind of just decided, you know what? Everyone loves to stream. Everyone loves to talk about the stuff as it's happening. I usually don't care. I mean, I don't, but I figured, you know what? We just hang out and see what's going on, see what happens.
and it looks like to me, away from the tech, overhiring and that, it's a job-making machine. She just said that there, and the underlying is Amazon and $17 an hour. That's changed the entire dialogue of labor in this country.
Totally agree. If you look into the statement this afternoon from the
$17 an hour to work in Amazon?
committee anticipates
Actually, that makes sense.
increases in the target range will be appropriate. The market response, Lisa picked up on this, down, back up, down again. We're down 0.4% on the S&P.
Usually, I think the warehouse, there's a warehouse like
Just a little bit
about like 45 minutes an hour from me.
22, you can
I think they're starting at like $19, $20 an hour.
48, so the curve
Nice to see you, Johnny. H44, good to see you too, my friend.
is the twos, 10.
I'm glad you guys showed up. Like I said, this is kind of just me winging it kind of thing. There's stuff going on with obviously with the Fed hike, the interest rate hikes and the Fed meetings and all that. I normally don't care for it. I figured, you know what, give you guys a reason to come by. So this is more of a watch party than like a hangout kind of TA thing. So I really, like I said, if you guys want me to go over some TA, maybe you missed yesterday's live stream, I will. But primarily we're just watching to see what happens, see if anything really happens.
John Bogle view on your Vanguard note that if you miss the 30 best days going back a few years to 1928, you're wiped out. You don't get to play. How do our viewers and listeners get to play given the cacophony and noise of a Fed?
It's a great question, Tom. The reality is what we say to our investors is they need to stay focused.
What's interesting is all major markets have no direction. Yeah.
If you miss the 30 best days, you're also
I mean, like, I know the major ones that are affected are the DXY.
hard for investors to time markets. So for those investors, we just
The DXY is affected by, I mean, we're looking at a 1 minute, so,
diversification, making sure they're
just
investing in funds
tread lightly when it comes to the ES is, I know ES reacts
earnings in the market.
fairly strongly to news like this. What'd you say, Pratish Mana?
In the market. And the basic feeling here is things are going to fall apart in a 78, 79 pre-Volcker way. We've ebbed away from that with a spectacular.
Very similar to BTC.
What does this Fed need to do with the market?
To be honest, this looks like the ABC I'm looking for.
Well, I think there's a couple of
Oh, if you guys are in the Discord, you guys want me to share my screen too, or no?
observers trying to get inflation under control, and they're doing a great job.
Or are you guys just watching the stream while hanging out?
How we're looking at the economy going forward.
No need. We can see on stream.
We're seeing inflation
Okay, cool.
3% around that range at the end of this year. But that last mile
So when it comes to Mana, that's probably the main ABC I'd be looking at. Just because how I gauge this is I kind of look how the separation between the two trends form, and as well as what's the reaction after. Okay, you can see the break in trend is very similar between these two, but we got a little bit more of a developed move after this dump. So to me, this looks like it's ABCA to a B to a C. That's just me personally. That's what I'm looking at. So to me, that's going to be your pivot.
sit there and invest in a money market fund where you're earning 4.3% or so. That's real money.
We were talking about the market response to this somewhat,
So.
some say hawkish, some would say in actuality dovish statement. There was
It's like watching it's like watching paint dry. Got to go. Thank you, great community. Alley Cat, you are right. It's one of the reasons why I think it's so funny that people freak out over this. But yeah, it's good. It's good to see you. Thank you so much, Alley Cap. But yeah, Perthish, man, I hope that was a good enough answer for Amanda for you.
Really how he's thinking about the market more broadly, and when we look at financial conditions and the fact that they've eased up so much over the course of the last 6 months or so, if he were to come in and say something more aggressively than what the market's expecting, so again, our view is that there's going to be a couple more rate hikes, which is in line with the language, but if he were to say, you know, the market is way off base, I don't think that's going to necessarily be perceived well by the equity markets, which in our view still seem a bit stretched from our perspective.
So that's actually what I was going to ask next. Do you think that markets, the equity markets, have fully priced in a rate regime in the 4% handle, even 3%?
Read my joke before AH44 comment. Okay, so I think somebody has pointed this out. Scopes, you might as well. I think you might as well just DM me sometimes. Like, I'll show you. Sometimes, for some reason, I don't know if you could see this. I was watching Jason Casper before. If you look at, like, let me show you chat. For some reason, sometimes chats don't go through. I don't know why. So like you said, read the joke. I'm looking. It's just not showing up. So guys, just keep in mind, I do keep my eyes on chat. Someone else brought this to my attention before. Sometimes comments just don't go through. So you might have to send it to me on Discord, Scopes. Too spicy for YouTube? That is possible.
Coming down to where we forecast. Now, if we got into a place where inflation was really, you know,
okay, I'll DM, but you have to read it out loud. Yeah, all right, I'll make a promise. I will read it out loud.
Greg Davis there, a Vanguard. Greg, this was wonderful to catch up with you, sir. Again,
switch to live chat instead of top chat.
Down about 0.4% on the S&P 500. Your bond market selling off a little bit at the front end, so yields higher on a 2-year by 3 basis points to 423. On a 10-year down 2 basis points to 348. 2-year yield higher, 10-year yield lower. That means the difference between the two gets wider. The curve a little bit more inverted, negative 74. The difference between the two, that widens by about 5 basis points actually. So
maybe I should allow for all comments.
The Federal Reserve hiking interest rates 25 basis points. It was a big fascination, obsession.
Sort by newest.
Whether this phrase ongoing increases would remain in the statement. Tom, it did. The committee
I see what you're saying.
Increases in the target range will be appropriate, but how much further are they going to go? And that's the mystery for the rest of this year as the gap.
Okay, all right, I got it. Scopes, I can see it now. All right, I'll read it out loud. I was walking through town the other day and I saw a small child struggling carrying a plasma TV. I asked if he wanted to help. He turned around and said, "Fuck off. It's only an iPad." He was just a midget dwarf man. That was good. That was good. Fuck off. It's just an iPad. Thank you for that, Druther. Thank you for letting me know. Maybe that's what it is. I'll have to keep it just at that. That's really funny, actually. Oh, that's good. That was good, Scopes. I'm gonna move this. I'm gonna switch to this one. See ya, guys. I'm sorry if I missed your chats. If he... Fuck off, you twat. It's only an iPad. That was good, man. Do you check other markets as well? I mean, occasionally, if you, I'll look at like the S&P. I'll look, but you know, I'm using this on like a much larger time frame. S&P, Dow Jones, DXY, ES, gold, silver, Tesla, Apple. Like some of these, like I'll look at like the main font, the main indexes, DXY, ES. Sometimes I'll look at metals. You'll see I have like Apple, BMW, Tesla. Just like, oh, what's looks like BMW wants to test that high.
The weakest since May 2020, and if you take out the pandemic as the weakest since 09, that sounds absolutely dreadful. You'd be asking yourself, just on that basis, on that data point alone, why on earth is the Federal Reserve hiking interest rates?
Powell is on. All right, let's go. Let's take a look at Powell.
To jobs, Bramo, to your point, openings climbing to what, 5-month high, and now we've got the ratio.
Monetary policy that is sufficiently restrictive. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining
I'm going to turn the
restrictive
music down a
stance
little bit
for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy.
But yeah, retro. I'll check every once in a while, but you know, I don't focus on smaller time frames. I kind of stick to larger perspectives, and a lot of what I look at is I look for buying opportunities. Like I bought Apple off of this ABC.
Pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment.
We're dumping hard. Oh, there we go.
The market remains extremely tight, with the unemployment rate at a 50-year low.
Let's go, everyone.
Still very high. And
hey, look, ABC to take out the liquidity of the high. This is a crackhead time frame, so don't take this to heart. ABC to take out the liquidity up here, and boom. Let's see. Does LTC have a halving coming up? That's a good question.
The labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above.
Yeah, so it looks like it's going to be August 7th, 2023. That's going to be the halving for Litecoin.
Rose 5.0%, excluding the volatile.
Yep, wreck the shorts and go lower. I think. Oh yeah, you'll come up, basically wreck people longing up here. Basically, too many people were expecting price to come up and take out these.
Developments are encouraging.
Am I louder than Powell?
Substantially more evidence to be confident.
Check. I'll turn Powell down a little bit more.
Despite elevated inflation, longer-term inflation expectations
you're louder.
Well anchored, as reflected in a broad range of surveys of households, businesses, and forecasts.
So when it comes to this ABCs, you're taking out the liquidity higher. That's like on a very this is a very small time frame example, but this is why ABCs work so well. Is you're basically taking out early traders, you're trying to take out this breakout trade to basically make new highs, and that's just not the case. You get absolutely wrecked down here. Now it's possible it could be situations to where you come up, wreck the early longs, come down, wreck the shorts, and then come back up. It's possible, but you know, because we're using such small time frames, I don't put any serious weight onto this. Now, if it was on like a 30 minutes to an hour, we can go ahead and talk about different ABCs and how they work out.
To a returning inflation to our 2% objective.
Let's see. 22,314 is my A low. Do you have that too?
Bringing the target range to
22,314.
And we are continuing the process of significantly reducing the size of our balance sheet.
22,314?
We have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target.
Talk about this low down here.
Will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2%
that low
over time.
No, to me, if anything, the A. I mean, this is too small of a setup for me, but the A is up here at around 22,460. But also keep in mind, I'm looking at the low of the channel we are in now. Now, to me, because this is a completed trend. To me, all this is a completed trend. So after the trend is completed, you have to go look at it from
continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess.
Yeah, since the trend is completed up here, you have to look at it from this high on, if that makes sense, because this is one continuous trend. So now we have to focus on this area of price action. Based on this area of price action, that's going to be the A at around 22,450. Well, actually, no, hold on. 2242. But I'm not taking that position. That's too small for me. You know, I'm zooming out a 30-minute. This is just a blip on the map. So I need a little bit more to work with. My opinion, I'm kind of hoping we dump hard and get another situation to where we come down and, you know, put in a much larger extended downtrend.
Growth and some softening of labor market.
Something like this. If we can get something like that,
restoring price
fantastic.
is essential to set the stage for achieving maximum employment and stable prices over the long
Did we get back above? Oh, we did.
The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder, and could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Hi, Chair Powell. Thank
Come
you
on.
for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate?
God, this chat is cancer.
To see inflation come down to the levels you're looking for.
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway
Bitcoin hodl
is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed, demand is shifting back to services, and shortages have been abated. So you see that in the housing service.
How exciting is this? I know you're joking.
For a while, but then to come down.
Why don't you listen to the order book?
So
it's insane. The order book. What is that?
The issue is.
Oh, is that basically like buy and selling going on?
For non-housing services where we don't see disinflation yet. But
that stuff would just give you a headache.
So far, what we see is progress, but without any weakening in labor market conditions. Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the market.
Put the audio on. It's free. Is this in Tradingview?
It's gratifying to see the disinflationary process now getting underway, and we continue to get strong labor market data. So
can I do this on Tradingview, or is this like I have to like pull it up on YouTube?
In March.
No, it's a site. What's the site?
Chair Powell, Neil Irwin with Axios.
Oh, we're breaking higher. All right, this is interesting.
That would let some of the air out of the labor market without major job losses. We saw the opposite in the December jolts this morning. Job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is?
I think he means the order flow chart.
So you're right about the data, of course. What we did see, we've seen average hourly earnings.
If it's a free site,
index abating a little bit,
or if it's on YouTube, I can pull it up.
Highs of 6 months ago and more, but still at levels that are fairly elevated.
Just type it in.
Job openings number in JOLTS has been quite volatile recently, and I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work.
You have to Google it. There is a live stream on YouTube. Yeah, what's... Oh. Is this it? Live book map? BTC. It's a site. Top one. There really any sounds though? Coyote, I'm sorry, there's a delay. If you want to yell at me, come yell at me in the Discord. The site. I mean, oh no, I was talking to Coyote. Yeah, if you, I mean, I'm not sure because there's a bunch of them. If you maybe if you drop a link. I don't feel like signing up for any of this. If this is something you can just watch without signing up, I'll do, but I'm not going to sign up for this. I'm going to go back to Powell for the meantime. Actually, I'm not sure if he'll able to drop a link here in chat. Jerome Powell.
Sector that represents 56% of the core inflation index, where we don't.
Wow, we're going for it.
So
I posted a link in the Discord.
Inflation in core services X housing is still running at 4% on a 6 and 12 month basis. So there's nothing happening there. In the other two sectors, representing less than 50%, you actually, I think, now have a story that's
cool.
That's coming together. Although you don't actually see disinflation yet in housing services, but it's in the pipeline.
Oh, geez, what is happening?
For the third sector, we don't see anything here. So I think it would be premature. It would be very premature to declare victory or to think that we need to see.
Oh my goodness! Oh no! Hold on, can I adjust this?
There are many factors driving inflation in that sector, and they should be coming into play.
This sounds like I'm in a casino. This is what a casino sounds like.
And I think until we do, we see ourselves as having a lot of work left to do.
On a 10-second chart.
Howard Stein with Reuters, and thanks as usual. So I just wanted to
this is a casino.
Seem to be saying things.
I always listen to the order book when I'm in my car making dinner. Why? You guys have broken me. You guys have broken me. I don't know why I found that so funny.
So I'm wondering, why is that the case? And does it have more to do with uncertainty around the outlook, or more to do with
This is literally what a casino sounds like.
So I guess I would say it this way. We can now say.
Oh shoot! Yeah, LTC is going for it.
The disinflationary process.
See, this is why I ditched LTC, man. Shenanigans. It's been a fantastic spot buying coin. Like I have some LTC.
For the reasons we thought, it's supply chains, it's shortages.
Wow, people are going for it, man.
Back towards services. So
I'm not gonna lie. This reminds me like I'm in a casino, and I'm gonna bookmark this.
So the second sector is housing services, and that's driven by very different things. And as I mentioned, with housing services,
Dow Jones pumping.
And other forecasters expect that measured inflation will continue moving up.
All right, looks like we're gonna go for it, boys. Looks like we're going for it.
That new leases continue to be soft, and we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation.
Dollars dumping.
Good sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good, and we note that when we say inflation is coming down, this is good. We expect to see that disinflation process will be seen, we hope soon, in the
Retro. This is probably one of the greatest. I would never do this. Look at this. Besides, like doing it on stream for like this kind of situation. I'm not gonna lie. This is hilarious. This makes me laugh. And it literally feels like if I close my eyes right now and turn off Jerome Powell, it literally sounds like I'm in a freaking casino right now. You just hear slot machines constantly going off.
And so the labor market will probably be important. Some of the other ones, the labor market's not going to be important.
All right, I got to turn this off.
In any case, we don't see disinflation in that sector yet.
Really? Wait till you hear the $5 million orders. Oh, there's five people. All right, hold on.
Which is the thing that we think is the best predictor of headline PC.
I'll put it back on.
Mandate. So it's not that we're neither.
I want to see if we can get a 5 million.
Telling you that we don't see.
If you guys want me to turn this off, I'll turn this off.
In that large sector, I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves. We got to be honest with ourselves, and we see ourselves as having perhaps more persistent. We'll see more persistent inflation in that sector, which will take longer to get down, and we're just going to have to. We have to complete the job.
So I sometimes sleep with Bluetooth ears and the noise at big orders when I'm in huge trades. My wife, you can't be serious, man. You can't be serious. That is not good. I'm not gonna lie. I know you're. I think you are serious, but I don't know. Don't take this the wrong way, but I think that's hilarious.
So
the default setting isn't different at 5 minutes, but it's at 10 minutes. You change the time frame?
We think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're of course taking into account.
Bro, that's mental if you sleep to that. I once was awake for 3 days at the top. Made 32K in one night with that mega dump. Jesus, man.
And the way we understand it is basically the three.
Oh, million. Oh, okay.
And again, we don't see it affecting.
The default setting isn't different at.
Housing yet.
It is at 10 minutes. Okay.
I mean, I think our assessment is that we're not very.
Wow, that's crazy, man. 32K in one night with that mega dump. Congrats, man.
We don't know that, so I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, by an appropriate set of measures or positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy.
I mean, you could get an ABC like this. Like I said, it's just me being a crackhead. Don't take any with this advice seriously. You could get something like that. When short from 64K got out too early, wish I held it. Yeah, I was short from that. I was short from.
Talking about the path ahead and the state of the economy.
I was short from 67K. I shorted this top. Oh my God, what is happening? The casino of life, literally.
The debt ceiling, given that we
yeah, I shorted 67K and I let go of that position around like 41.
Will the Fed do
That was a big trade for me.
as it relates to making payments as the fiscal agent, or will it do its own analysis?
This is crazy.
So your question is, would
Something more than playing war with money. I love it. Yeah, pretty much. Yeah. Unfortunately, this game is a give and take. Like, in order for you to win, someone has to lose.
Or will it do its own analysis?
In order for someone to lose, when you lose, someone else wins. You know what I like to tell people is like, dude, you're paying for something. When you're losing, you're paying for someone else's cocaine addiction.
I feel like I have to say this. There's only one way forward.
Can I adjust this?
And that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner.
That's a 3.5 mil. I'm not gonna lie.
Fiscal agent.
I'm not gonna lie. Hover over the second icon.
I'm just going to leave it at that. This is a matter.
What can you change it to?
Really, it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions. So we're the fiscal agent.
All right, I think that's the lowest I can get. Yeah, it's by my face. It's like right here. Nope, this way. It's like right there. That button. Yeah, I clicked that. You can't see it because my head's covering it, but yeah, I dropped it down to, I'm pretty much like 0.05, which is like the lowest setting I can get. Wow, BTC's really going for it.
We judge that the appropriate.
I say that, but if I go to 5 minute.
To raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that.
I'm not gonna lie, Retro. I don't know about you guys, but I think this is cool. It's fun. It's fun to watch it when we're just like BSing.
Write down new forecasts in March, and
but guys, let's see if this ABC plays out. If this ABC doesn't hold, we're going for the new high.
I mean, would it be possible to take a meeting off, for example, and then resume? You know, could you, rather than just do...
See who else is going for it. KDA is going for it. Fantastic, because I'm in a KDA short. Eat's going for it. Fantastic, because I'm in a Eat short. LTC, I really don't care. What about ADA? How's ADA doing? All right, ADA still hovering around my entry.
What we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace.
Maybe making a smaller read, possibly.
I think a lot of options are available.
We have no volume up to 28K on the weekly chart if you put in the VRVP. Okay, I know what you're talking about.
But this is not something that.
For lower seed, complete A wave for downside. Yeah, I can see that upside. No fly zone. What a stream, boys. Yeah, what a stream. What a stream upside down head.
PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%.
DXY on support.
And you've achieved this without going to your 5.1% funds rate, which is
Okay, yeah, DXY is testing that area of support right now.
you've also achieved
Off of this local low. Let's see if it holds.
the unemployment rate, which
If this support doesn't hold, we're going down to 97 on the dollar. That's actually huge. Thank you for showing that, Coyote.
to achieve these things without raising rates that high, and also without
So we probably could get a bounce here soon.
surge in unemployment. And specifically, I wonder if you might comment on the speech given by.
Wonder, can you like move this? Can I move this? Oh, I can.
Other than wages may be responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages. The idea that it may not require unemployment rising.
Okay, that's gonna be better.
Sector of inflation under control. Thanks.
So a couple things. First, on the forecast.
Yeah, with low volume, area edges act as resistance. But if it gets broken down, it will move through that area quickly. Yeah, that's we'll see.
Significantly negative readings from goods inflation. Most forecasters and
Let's see, shared screen of what I mean.
Significantly negative readings will be transitory, and that goods inflation will move up fairly soon, back up to its longer run trend of something around 0, something like that. So a lot of forecasts will call for core PCE
Let me see.
to go back up to 4% by the middle of the year, for example. So that's really
Yeah,
a sustainable level.
yeah, that's what I'm looking at too. No fly zone.
There's work left to
Oh, I'm seeing myself on your screen. All right, I gotta stop watching.
let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned.
Let's see. We gotta see you next stream. Staring at poke back, listening to these dings, and you know what I'm gonna.
Sectors that represent 55 or 60.
You know what I'm gonna do, Coyote? I'm just gonna stream my normal TA like I normally do, but I'm just gonna leave this noise on in the background. Is this about to break out, or what is it looking like? So Nick, it looks like you're new to the stream, so welcome. If you're not familiar with how we do things, we try to trade reversals, and as you can see at the moment, basically what price does is price will basically form a trend in a group of threes, and take this with a grain of salt because we're on a 5-minute. But usually what happens is you'll get these breaks, and a lot of times people will sell into the breakouts of these. So you'll get a reversal here. So let's see if this possibly is reversing here. If we do have some strength, I will keep that in mind. If there is some bullish strength, I will definitely say we're probably going to go up and test the high if we keep going. But as of right now, this looks like a good setup. So it really depends how it behaves in this region. If we continue to hold above, we're probably going to push up and break 23 for that previous high.
I think most forecasters would say.
Or is it 23,966? But as you can see, we're fighting it. If we break down below, we can do something like this to where this is maybe just a larger pullback, and then we just continue downwards.
A really significant economic decline or a significant increase in unemployment, and that's because.
So, hope I answered your question, Nick. It's either we're fighting, and if we continue to maintain below where we're at right now, things look pretty bearish. But if we continue to pump, we gotta take it one level at a time. We just can't sit here and just shoot for the moon. We gotta go ahead and test different levels as we're going up. It is Super Mario. Yeah, literally, it's like Super Mario.
We understand why housing inflation will come down, and I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see.
I'm not gonna lie, I'm having a fun time right now watching this. A breakdown would be great. Yeah, it definitely would. This is the time to do so. Maybe we can show an example of what ABC does in live, real time.
I think it's because this is not like the other business cycles in so many ways. It may well be.
Like I said, I'm not too dead set on this setup because we are on a 5-minute. On a 30-minute, it is kind of there, but when I zoom out, it's not that pronounced. So I'm taking this with a grain of salt, but we'll see how it respects this. Not much volatility now. Yeah, we're not seeing too many, $2-3 million orders here.
I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome. But
you can't intro a guy on a 5-minute. Yeah, I know. Nick, this is not what we do here. If you're still watching, we stick to a 30-minute to an hour. We look for larger setups for reversals like this. We're still long from. I'm still holding a long position from this low here. Go ahead and in case some people just don't. Long from 15,473, and I plan on holding this. We're up almost 1,300% in profit, as well as when it comes to ETH, we're up about 937. And on ETH, I'll show you the ETH setup we're taking or we're currently holding from the long trade.
What you think the danger to economic growth is going forward, and whether you're very close to perhaps.
We're long from this line here. So for ETH, we're still holding it. And we're basically waiting for another continuation setup before we can go ahead and take profit. We might not get that, to be honest. We'll see how this plays out. But yeah.
Positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors, though, that need to be considered. You will have seen that the global picture is...
NASDAQ is flying. FOMC was expected, so why would we dump hard? That's what I'm asking myself. We still haven't had that wake off. The target is down, so I'm uncertain right now.
Inflation does come down.
It is priced in, but you also got to think, from my perspective, how I view things. We probably have to shake people out before going lower. You know what I mean? You just can't dump off. You can't dump off a cliff. But for me, I would like to see a shakeout of people FOMOing into longs before breaking down further. Let's take a look at the net. I see.
I think there's a good chance.
Yeah, SPY's flying. Oh, did we get that higher high?
Positive growth this year, and that's my base case. Is that?
Oh, I think we got the higher high, folks. Nope, I lied. We're about to get that higher high, though. If we get that higher high, we definitely can reverse to see how the DXY is doing. DXY, we need to come back above that 101.29. I feel like a crackhead right now. I can see how this is fun. I get it, but this is not practical to make money on. Or practical way to look at things. I love this. We had a 1.9 mil. 1.3 sell order.
So I don't think
1.9 buy. Wow, we're getting a lot of sell orders here.
I think it's just an accumulation of evidence.
All right.
So
Retro, you got me hooked, man.
Time of the March meeting, we'll have 2 more.
You got me hooked on this. 2 million. I want to see a 5 mil.
Carefully, as all of us will, and we'll be asking ourselves, what are they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's way above, well above where they were before the.
Because the crackhead's dream, we got.
Pandemic. So.
Order flows with all these dinging sounds. We got Jerome Powell speaking in the background. We're looking at a 5-minute chart.
Comes in, it's going to be reflected in our assessment of the outlook.
I am not gonna lie. This is a little bit entertaining. It is entertaining. I can see why people do it. But don't expect this every time from me.
2% inflation for the public. We're not. Market participants have a very different job. And it's a fine job. It's a great job. I did that job for years, but in one form or another. But we have to deliver that, and so we are strongly resolved that we will complete this task because we think it has benefits that will support economic activity and benefit the public for many years.
Thank you, Marcelo. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. Edward Lawrence from Fox Business, by the way. We had solid job growth, slight falling.
Come on, man.
Consumer spending. It seems.
Let's shake people out of these positions. Let's get this ABC going.
From a 9.1% CPI inflation to a 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down and Congress did what it did, and we did what we did. It's unique. So I think certainty is just not appropriate here.
I know. Wait till I teach you crypto quant. Do you know that to see the inflows and outflows of BTC on exchanges? It literally told me, man, sell all your coins now 3 days before the top. I sold everything and put it on a 10K short and 10X. Got underwater 3 days, but then making tons while holding a cup of coffee. While everyone was freaking out.
We've got a long way to go. It's just
I know it. I know what you mean. But I'm good on the crypto quants. I know I kind of have an idea what it is, but trust me, I've been down that road before. I'm good. I know. Hey, I'm sure it works for you, man. But for me personally, this is just more of an entertainment thing.
You know, so again, my forecast and that of my colleagues, as you will see from the SEC,
We just keep pushing for this, man.
different forecasts, but generally, it's a forecast.
Like I said, I would like to see a breakdown past that high to get people shaking out. Basically, grab liquidity up here and force lower.
But not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster. That's a different thing. You know, if that happens, inflation comes down much faster, you know, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Thank you, Chair Powell. Simon Rabinovich with The Economist. May I ask a further question about the language around ongoing increases? That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence, or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecast.
Oh God.
For continued subdued growth, some softening in the labor market, but not a recession.
So I guess if you change this, it'll change how aggressive it is. If I go all the way down.
But that's what we thought in December. Markets are past that. They show inflation coming down, in some cases much quicker than that. So we'll just have to see. And we have a different view, it's a different forecast, really.
Which, let's see.
Outlook, I don't see us cutting rates this year.
Would you take that short if it goes under that level? I mean, I'm already short off of that region, off of this level here. It's off of this peak, so it's the same peak. If you guys aren't in a short trade, yes, go take that position. Just because it's not off of this wick, it's off of this wick. But for me, I'm already in it. So for me, it's just letting it ride. Says you need to change your pants after that. Yeah, it's all small trades to big trades. Gotcha. I think I found a good middle ground.
The general sense of it. Look, we understand. I personally understand well that COVID is still out there, but that it's.
I think like the 0.05 is like a good middle ground.
Economy, and we've kept that statement in there for
gives you another idea of what kind of money is involved in it. I gotcha. Okay.
But we thought that people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in the Fed's
in a 500K order.
Or post-meeting statement as an ongoing economic risk, as opposed to a health issue.
Hi, Chair Powell, Nancy Marshall.
Can I draw?
Marketplace. I wanted to go back to another thing that
Can you draw on this chart or no?
she said she doesn't see signs of a wage price spiral, and I'm wondering if you agree with that.
I do. Yeah, I do. I don't see that yet, but the whole point is, once you see it.
Nah, I think you can't draw on this. You can? How do you draw?
That means that effectively, in people's decision making, inflation has become a really salient issue, and once that happens, that's what we can't allow to happen. And so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day, the more risk of something like that. But no, there's not much it's more of a risk. It always has.
Am I missing? You can put lines on it. Just press on the chart.
And people are, we picked.
Is it like a drawing tool or something?
I've seen some data too that show people are, gradually they're glad that inflation's coming down. People really don't like inflation, and as we see it coming down, that could also add a boost to economic activity.
I'm pressing it, but it's only allowing me to move it.
Very low, with 3.5% unemployment and high wage increases nominally by historical standards. Why can that be? It has to be inflation.
Oh, they disabled it.
So I think once inflation is seen,
all right, it's no big deal. But basically, you want to get back below this pivot here.
That's at the very heart. It's consumers and businesses that essentially we believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. In this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well up, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Thank you, Chair Powell. Greg Robb from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. The committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder.
Sorry, I gotta type a Discord message. Let's see.
I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way, it's something that we monitor carefully.
Was all this because Powell said they will continue tightening going forward, taking the DXY and giving risk assets to move up? It's a reaction from that.
It's important that
doesn't mean we're back below. Doesn't mean it's actually going to do it. It's just it doesn't mean how do I say this.
There's a different
it causes fear and uncertainty, or it causes anything that he says will cause a preemptive move.
I try to persuade people to have a different forecast, but our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that, and we're watching it carefully. We'll just be monitoring. Thank you very much.
Oh, geez. For Thish. Drop it in the non-trading questions. Let's see. How did you know what's funny? Tinder. Dating site. At the time, like I didn't really. That's kind of how I just met all of the girls I've met in the past. I mean, there's a couple through like friendly connections and stuff, but the ones that, I mean, they didn't work out, obviously. Close my small, long, and short now. Hope it dumps now and complete the white off. Yeah, that'd be nice, man. If we can, I mean, the pressure's there. So if we stay below this, I think there is some bearish pressure to be said. And guys, if I'm personally thinking if we do continue downwards, I think I'm gonna take that continuation setup. I think it depends how long this takes to build. I know, Prathish. I know. Don't discount dating apps. I always tell, like, I know, like, dating, like the Tinders and stuff are like they're meant to for certain things. You just got to be careful with who you, I guess, take seriously on those apps. You just got to be careful. But you could absolutely meet some great people on that app. Especially like if you guys are gonna become traders, like you guys have to leave the house. No, I'm kidding. Sometimes it's better if you just don't, if you just don't have the time, or if you just don't leave the house. It's kind of convenient. LOL. I think, let's see, I've been married 33 years. Women are simple like us dudes. I would not nowadays, Crypto Beehive. I'm in a good situation. I met someone who's really cool. And I would want it any other way. Oh yeah, aren't simple. Yeah, they're not simple at all. It's gotten even worse. I know like a lot of friends of mine who were in my age bracket and younger who have been like, who are still dating. And some of the stories I hear, man, are absolutely insane. And before I met my girlfriend, like, it's crazy. It's crazy, man. I don't know how they do it. Jerry, hey folks, how you doing, my friend? We're just hanging out. Like I said, it's a little bit of a non-planned stream. Are we done with Jerome Powell? Buy Top G, free BTC. Jesus Christ. Are we done?
Think about all the different possible ramifications, and I think the answer is basically I don't think there's likely to be any important interaction between the two because
Powell's done. Okay. All right, turn that off. Animal lovers, good to see you. How you doing, my friend? Like I said, we're just hanging out. We're just listening to Jerome Powell speak. We're kind of just observing what DXY looks like. It might flip off of the support. Let's see. Oh yeah, it did a slight rejection once. I mean, I'm not too concerned. I want to see like a clear rejection, like a come up, a test here for a like on a 30-minute to an hour, like a good couple candle closes. I'm just not going to base it just off of that one touch. Hi, I'm... Is it... Alright. I'm gonna... Oh. Oh, this thing, Jerry, you knew. I don't know why. Retro House Invasion introduced me to this, and it's like I feel like I'm at a kid at an arcade. It sounds like a casino. I think it's hilarious. I think it's absolutely hilarious. And so for some reason I just like, hi, I'm Indian. I'm India. Hi, am India. Hello. Nice to meet you. I know a lot of my audience is mixed from around the world. So welcome. Yeah, I can see the chart, but the order booking keeps getting blocked. Really? Interesting. I never knew that was a thing. Oh, you see that spikes on the bars below? Yeah, here is volume, right? Oh, those, liquidation levels. Okay. What does the pink mean? In the middle here, right? It defines bottoms. Oh, okay. Okay. I got you. My name is let me know if I'm wrong on this, Perthish. Poja? We're also animal lovers as well. Let's see. It defines bottoms. That one, pink is... Yes, you see we're reverse BTC going up. Short videos, BTC going up or down. Easiest way to explain. You know, if you guys want to know, if we maintain below this high at about 23,375, that looks bearish, but if we can push through, we're probably going to go up and test the peak here at around 23,960. Puja. Okay. Please tell me BTC going down or up. Shorts video, if you're looking for just a yes or no answer, you are not at the right place, my friend. You gotta understand why I'm thinking that way. Right now, I'm thinking if we maintain below this wick, we're looking bearish. If we can maintain above, we're gonna test there. That's Puja. Am I pronouncing that right? Puja. Whales chasing each other. Yeah. Correct. All right, cool. Just want to make sure. Puja, nice to meet you. Glad you can make it to the streams, my friend. Hope you're doing well. If you have any questions regarding how I do things, the strategy that we trade, I would love to help you out. All right, guys. I'm going to go ahead and call it just because I'm even here for an hour and a half. I know I didn't want to say we'd be here for long, but I was honestly just waiting for Jerome Powell to stop speaking. But yeah, just to let you guys know, I'll leave you guys with this little gem. If we can maintain below this level of this previous wick, things are going to look bearish. But if we continue to push, I'm probably going to say that we're probably going to test this upper region up here, put in a larger ABC. I probably will be taking that just in case. But But that's pretty much it. If we push straight through this level and never come back down, I'm not going to be taking any more shorts. You know, I kind of want to see a quick up and down. If we kind of, the more we push through this region and consolidate, the less willing I'm willing to take that position. Don't have too much with the Bookmap Casino. Have a good night, dude. Thank you so much, guys. I do appreciate it. Yeah, we'll take. This is gonna be. I know if you guys coming from Kite's channel, I know he looks at like other people's live streams and chats. This is what we're gonna be doing. Bro, why does the chart feel like a correction is coming? You are absolutely right, Tashin. That is something that I'm definitely looking for. We're looking for something like this to happen. Looking for another push down. If we can get another push down, fantastic. If not, we're probably going to get a push up to this region before coming back down. But we've just been hanging around this region for too long. I feel like people have been waiting for the FOMC news to come out. So, you know, I think the market's been taking its time to make a decision. Now that we have that news, we can start to push for the next decision. So, thanks, man. The stream was wild. Yeah, I had fun, guys. I really had a great time. So it was good seeing all of you. If you guys don't know, I'll slowly introduce this every once in a while just to see what's going on. You know, where we're not going to be becoming crackheads over here. So thank you guys so much. I do appreciate you. Tomorrow, around, you know, we're going to stick to our schedule, normal time, 1 p.m. EST. I will go ahead and, you know, after this, I got to do some stuff. I'll come back, post it ahead of time, as well as you guys are in the Discord group. I will let you guys know as soon as that is done, or so that is up, and I'll give you guys a heads up. I'll create an event so you guys don't miss out. But I do appreciate you guys. Retro, stop it. I'm gonna stop. Okay, I'm gonna stop. This is what we're gonna do. Oh, I always do that. We're gonna do this. We're gonna make my face a little bigger here, and we're just gonna. I'm gonna put myself next to the order book here, and we're just gonna do this. Hold on. We're gonna have some fun here. All right. We're gonna have some fun. Bye. Oh, you can see the corner.